It's probably one of the most, it's the best seller in the market currently. I think it pretty much has the largest market share in the online term plans. And I'll explain this plan in detail. So it's a very aggressively priced plan also. So it's attractive to buy. I wouldn't say it's the cheapest, but I think it's very aggressively priced for the brand that HDFC offers. And I would strongly recommend that you shortlist this and consider this as a term insurance option in case you're opting for it. So this is a plan which has a lot of variants and pretty much has offerings which anyone would want to cover all different kind of scenarios. So this plan has got 9 variants and I'll read out the 9 options which are there, and later on I'll try to explain each one of these options with the help of an example. So the 9 options are, you've got the life option, second is the 3D life option, third is the extra life option, fourth is the income option, fifth is the extra life income option, sixth is the income replacement option, seventh is the return of premium option. This is popular with some people who want their premiums back in case nothing happens to them by the end of the policy term. Eighth is the lifelong protection option, and the last one is the 3D lifelong protection option. Now, all the 9 options in this plan have 3 inbuilt features or benefits which the policyholder or the nominee will get. They are a payout on death. That means in case the policyholder dies, you get a payout. An accidental total permanent disability and a terminal illness benefit. So these 3 payouts or benefits accrue to all the 9 plan options. No matter which you take, these 3 benefits you will get. So let's just understand the 2 benefits which are accidental total permanent disability and the terminal illness benefit a bit better. So what is accidental total permanent disability? So here's what clearly defines it. In case the policyholder suffers an injury or accident due to which there is a total and irrecoverable loss of the use of 2 limbs, or the sight of both eyes, or the use of 1 limb and the sight of 1 eye, or loss by severance of 2 or more limbs at or above the wrists or ankles, or the total and irrecoverable loss of sight of 1 eye and loss by severance of 1 limb at or above the wrist or the ankle. Or he is just unable to work because of the injury or the accident. A disability as a result of injury or accident, and is thereby rendered totally incapable of being engaged in any sort of work or occupation for which he can get a compensation. So this is what a accidental total permanent disability benefit is. Now, in case the policyholder has such a condition, all the future premiums are waived off and the policy continues till the end of the policy term. Now, what is the third benefit which is there is a terminal illness benefit. So here's what it means. In case the policyholder has an illness which is certified by 2 medical practitioners who are experts in this field, which say that within 6 months the policyholder will die, then in that case the policyholder's nominee or the policyholder gets the entire sum assured and the policy immediately terminates. So instead of actually having to wait till the policyholder's death, in such a scenario the lump sum amount is paid immediately. So these are the 3 benefits: a payout on death, accidental total permanent disability benefit, and a terminal illness benefit, which apply for all the plan options. Now let me just explain each of these plan options with the help of an example. First plan option is the life option. So let's assume Ritika, who's 30 years of age, takes a 1 crore cover for 25 years. And this is the life option. So she will have to pay rupees 7,611 for 25 years. And in return, she gets the 3 benefits: that the nominee gets a 1 crore payout in case of the policyholder's death, the accidental total permanent disability, in which case if this happens, all the future premiums are waived off and the policy continues, and the terminal illness benefit. In case diagnosed with a terminal illness, then the entire lump sum is immediately paid to the policyholder and the policy terminates. Now let's look at option number 2. Option 2 is as follows. Same, Ritika takes the plan for 25 years, a 1 crore cover, and she's 30 years old. So she'll have to pay an annual premium of 7786. By paying this, so the 3 benefits which are there, lump sum payout on death, terminal illness benefit, and the accidental total permanent disability is there. In addition, she gets a cover for 34 critical illnesses. So in case she's diagnosed with any of the 34 critical illnesses, she doesn't have to pay the premium for the rest of the policy term. So it's a great feature to have, because once you have a critical illness, chances are that you will not be able to go for work and there will be an income loss. So immediately your premiums stop, and in case of a death due to this critical illness or any other reason, the nominee gets the entire lump sum amount. And this benefit you get for by just paying an additional, I think, 175 rupees. So this, in my opinion, is a very strong option and variant which you should consider over and above the base term. So option 2 is something which is something which I would personally recommend that you consider in case you're going for this plan. The list of 34 critical illnesses, we'll give a link in the description below. You can check out which are these critical illnesses which are covered. So option 3 is the extra life option. Here, for a 1 crore cover, 25 years, Ritika's age is 30, she will have to pay a premium of 13,262 rupees every year. And in addition to the 3 base benefits which are there, she also gets an accidental death benefit option. What happens in this scenario? In case Ritika dies due to an accident, she can potentially take double the sum assured. That means the nominee, by paying 13,262, the 1 crore will now become 2 crores in case the death is due to an accident. She has the option of not doubling it, but maybe taking just a 50 lakhs extra or maybe a 75 lakhs extra. The maximum that you can actually take extra is doubling your current sum assured. So by paying this amount, you can opt in for, because accidental death is something which is completely takes the family by surprise, and an additional payout of a crore extra is quite a beneficial option. So that's it about the option 3. And now I'll explain a bit about the option 4. So option 4 is the income option. In this same plan, 1 crore cover for 25 years, and she is of age 30. In case she goes in for this, she will have to pay a premium of 12,320. So how does this work? In addition to the 3 base benefits, what she gets, or what the nominee gets, is an additional monthly income for the next 20 years. So the premium which I quoted, 12,320, she's chosen an option where the nominee will get 50,000 every month for the next 20 years. Ritika has the option of varying the amount and the period for which this monthly option will be paid. So she could take 75,000 for 15 years, 75,000 every month for 15 years, rather than 50,000 every month for 20 years. So that's an option which is available, and you can change the amount of income or the period for which the amount should be paid every month to your nominee. So the 5th option is the extra life income option. This is basically a combination of the 2 options which I just described before this, income option and the extra life option. So if Ritika is again taking a 1 crore cover for 25 years and she's age 30, she will have to pay a premium of 23,084 rupees. And what does she get? So the 3 base benefits, lump sum of 1 crore in case of death, accidental total permanent disability, terminal illness benefit. In addition, she can get an accidental death benefit. That means in case of an accidental death benefit, an additional amount of 1 crore. That means doubling the base sum assured. Plus, she can get a monthly income option for the nominee. So a 50,000 rupees for the 20 years every month is paid out to the nominee. Again, as I said earlier, you can change this from 20,000 from 50,000 monthly income to a 75,000 and maybe do it for 15 years rather than 20 years. So extra life income option is a combination of the two options which I said before this. So option number 6 is called the income replacement option. Now this drops the premium substantially. You really just need to pay 5,147 rupees every year. But the benefits are also slightly different, and the lump sum payout in this case will only be 6 lakh. So in case of the death of the policyholder, 6 lakhs is immediately paid out to the nominee. And then the other two benefits which are inbuilt is the accidental total permanent disability and the terminal illness benefit. The extra benefit which you get here is that 50,000 rupees would get paid out for the rest of the policy term. So in case the death happens in the second year, then for the next 23 years, the nominee will get 50,000 rupees. But yes, in case the death happens in the 15th year, then for the rest of the 5 years, the nominee will get 50,000 rupees. So that's largely why the premiums are actually the lowest in this case. You just need to pay 5,147 rupees. But the benefits are also lower. I personally would not recommend this option unless there is a very compelling reason to go in for this. So option number 7 is the return of premium option. Popular with those people who dislike term insurance for the fact that I don't get back my money in case nothing happens to me. There are a lot of people who say that I pay the premiums, nothing happens, so why shouldn't I get it back? I don't subscribe to this, but there is an audience which prefers this, and this option is also there. So same cover, 1 crore cover for 25 years, and she's age 30. You need to pay a premium of 26,338. Base benefits, all 3 included. In addition, in case nothing happens to you, all the premiums that you paid are returned to you. Please bear in mind that there is a component of tax. So suppose 23,000 is something which you're paying, which includes the tax component. You will not get back the tax component, only the basic component without the tax. That is returned back to you in this option. So as I said, this plan is quite comprehensive, and it's sort of tried to cater to all the possible scenarios and all the possible types of customers and the options which they want. So option number 8 is lifelong protection option. So in this option, for a 1 crore cover, for the policy term will be slightly different, but she's aged 30. So let me explain how it works. You will have to pay a premium of 65,375 rupees every year. So here's how it works. In case of Ritika, who is 30 years of age, so the policy, the premium payment term is considered this way. 65 minus the current age. So you have to pay for that many years. So 65, her age is 30. So 65 minus 30, the premium needs to be paid for 35 years. But the protection is lifelong, in the sense, whenever the policyholder dies, you will get this, the nominee will get this protection. So if you've taken a crores cover, the policy covers you for lifelong. It's called a whole life option. You need to pay 65,000 odd, but no matter when you die, the payout is made to the nominee. But the premium payment term is 65 minus your current age. So the last option here is the 3D lifelong protection option. It's just a small variation of the plan which was option which was just mentioned before this, which is the lifelong protection option. Here, suppose Ritika takes again a 1 crore cover for lifelong. That means whenever she dies, the benefit is paid out to the nominee. She needs to pay the premium for 65 minus the current age. So in this case, she's 30. So the premiums need to be paid for 35 years. She will have to pay 69,140 rupees for 35 years. So in addition to the 3 basic inbuilt benefits, there is the critical illness benefit also which comes along with it. So in case she's diagnosed with any of the 34 critical illnesses which are mentioned below in the comments, in the description section, no future premiums need to be paid. So that's sort of wraps up all the 9 options. In case you have any queries of any of these 9 options or any other details of the plan, just drop in a comment and we would be happy to get back to you. Further, I'll just explain some additional features and benefits in this plan, plus what are some of the eligibility criteria in this plan. That should sort of give you a very, very good idea of who can buy this plan, what are the different kinds of benefits which accrue in this plan. So there are some additional features and benefits which come with this plan. So when you're buying the plan, you can opt for a life stage protection plan, protection option. What does this mean? At certain events in your life, you can choose to increase your amount of cover, and there are 3 events which allow this option. So in case you're getting married, you can increase your sum assured by 50%, maximum of 50 lakh increase. In case of your first child, as in when the child is born, you can increase your sum assured again by 25%, subject to a maximum of 25 lakhs. And the third is the second childbirth, you can again increase it by a maximum of 25%. Limit is being 25 lakhs. So this life stage protection option, you have to opt when you buy the plan. And if you've opted for this, if these 3 events occur in your life, you can choose to increase your sum assured. Of course, if you choose not to increase, that's an option which you anyway have. Then an additional feature is a top-up benefit. Again, you will have to select this option when you're buying the plan. So be very careful. This just gives you the option to increase your sum assured at any point of time. Basically, when suppose your premiums are due next year at 31st of January, you should inform the insurance company beforehand that you wish to increase your sum assured. Provided the insurance company accepts this request and meets their underwriting criteria, they will increase the sum assured from the policy anniversary, that is 31st of Jan, when your premiums are due. And of course, your premiums will increase because your sum assured has increased. The only thing which you need to remember is you have to select this option at the time of buying the plan, and it is subject to underwriting and will increase your premiums. So these are the 2 additional features which you have, and this is an optional benefit. In case you want, you can opt in for it. Then there are the standard, criteria. Okay, there's another benefit which says that you can change your premium payment mode. That means, from monthly to half yearly to yearly. In case your premiums are due, you should contact the insurance company and take their permission and change your premium payment mode to whatever option which you want. Then there are eligibility criteria which we will display a table which will very clearly tell you entry age, max age, at what you can enter. Or rather, have a look at this table. I'll probably just read out the features or what the conditions are. So the minimum entry age is 18 years for all options except for lifelong protection and 3D lifelong protection. In case of lifelong and 3D lifelong, you have to be a minimum of 25 years to be eligible for the plan. Maximum age of entry for any of these plan options are 65 years. Minimum policy term is 5 years and maximum policy term is 50 years. So 50 years is a lot. And of course, you have the 2 options which give you a whole life protection option. Premium payment mode are you can pay regular premium, single, annual, semi-annual, quarterly, monthly. The minimum age at maturity is 23 and the maximum age at maturity is 75. So 75 I think is a good number or good age till which you should actually need a term insurance plan. The 75 of course doesn't apply to the whole life options which are there. And you need to take a minimum sum assured of 10 lakhs in this plan. So guys, that's about it. I hope this sort of clarifies very clearly what benefits accrue. In my opinion, it's a very comprehensive term insurance plan, and as I said, priced very aggressively. So I would recommend that you keep this as an option in case you're buying a term insurance plan. Thank you. Happy to take any questions you have. Drop in a comment and we will get back to you.